Hi, I'm Mike Sintolo, Chief Analyst of Cabot Growth Investor and Cabot Top 10 Trader, and I'm here with your Cabot Weekly Review, recording this late Friday morning as usual on January 26th. So when it comes to the primary evidence, which is like the intermediate and or longer term trend of the major indexes, the trends of most stocks and sectors, and importantly to me, the action of leading stocks, especially leading growth stocks, there's really not much you can argue with. It's been this way for a while. Yes, there's the occasional shakeout. Sure, there's been a couple of stocks that have broken some intermediate term support, but the vast majority are acting well. Some of them that did break support have snapped back, and others are just hitting new highs, good volume, that sort of thing. At the same time, this week I've been writing, listen, we're 3 months into the rally. There's no magic to that number, but historically, it wouldn't be unusual, especially with earnings season, especially with a lot of stocks up 30, 40, 50%. Just keep your feet on the ground. Wouldn't be unusual to see some choppiness here. Some stocks crack, some stocks begin new launching pads, not for the next 9 months, but launching pads that might take, 6-8 weeks or something like that, just to digest these gains that they've seen. Okay, I'm not predicting that, but I am a student of the market and history, and that's just something normal that can come along. I would also say that sort of indicator-wise, or something beyond just sort of spidey sense, so to speak, is interest rates are at key levels here. They have backed up. They're testing their 50-day moving averages, from below. So the trend is still down, and it's not unusual what's happening so far. But if we started to see much more strength, quote unquote, strength in interest rates, upside in interest rates from here, could be more of an issue. But overall, I'm bullish. I still think the ducks are lining up in terms of this being a very good year after 2 or 3 years in the wilderness for growth stocks. We're going to launch some winners, but it doesn't mean even in great uptrends, you do get pullbacks, you do get corrections in some of these stocks, especially as we head into earnings season. So just keep your feet on the ground. Don't chase a bunch of stocks that are sticking up in the air. Consider partial profits and be a little bit more discerning on the buy side. In Cabot Growth Investors Model Portfolio, this whole month we've really just done a couple small moves on the sell side, a couple small moves on the buy side. We're about between 20 and 25% in cash, which I'm kind of comfortable with right now. Doesn't mean I couldn't put it to work in the near future if I see some proper setups. But right now, like I said, just kind of being more discerning on the buy side and really seeing how earnings season progresses here in the next 2 or 3 weeks. All right, let's hop into the charts as usual. I'm using a program called MarketSmith. You can learn more at marketsmith.com. It's a product of Investors Business Daily. So a couple of points. I'm going to mention the major indexes, but this is the NASDAQ. It's still the leader. It looks great. Obviously out to new highs here, and clearly in an intermediate term uptrend, longer term uptrend, relative performance line to the S&P 500, which is this blue line. Might be a little bit hard to see, but take my word for it. Out to a new high. Okay, so the trend is up there. S&P 500. Same sort of thing, just as strong, if not maybe a touch stronger, but ballpark, same sort of thing, clearly in an uptrend, clearly a lot of buying. What is interesting, and it's not unusual after seeing the last year or two, but if you do look at, this is MDY, which is the mid caps, still in an uptrend, which is what's by far most important to me, because the money can kind of slosh back and forth. But to this point, actually, the broad market is basically down. I mean, it's down a little bit. We're talking like 1% or not even. But it's basically flat to down a smidge this month, while the major indexes are up, the big cap indexes are up. Just something to keep in mind. Okay, IWM, small caps, clearly a little bit worse. Of course, they had a pretty good run here. Still normal, still above the 50-day line, but let's see how that goes. And then even if you look at, this is RSP, which is the equal weighted S&P 500. So big cap stocks, just equal weighted. So Apple counts as much as, the 500 stock, whatever the hell that is in the S&P 500. And again, it had a hell of a run here. So this looks, just in and of itself, looks totally normal. I'm just saying it also hasn't really participated this month. The reason I'm saying that isn't necessarily bearish, like, oh, it's some huge divergence. It's just that, like I said, after 3 months, when some stuff's sticking up in the air, this is consolidating, the near-term risk of something changing is greater. That change doesn't mean the market falls 10%. The change could be a rotation into some of this stuff and out of some of the extended tech stock. We'll just have to see how it plays out. But just something to be aware of. Most important to me is the trend, which is clearly still up, but just noting, a couple of things like that. Also, just running through before we get into stock. So this is XLP. I always like to look at these defensive stocks. New relative performance low here just as of a couple of days ago. POWA is another, it's a very thinly traded ETF, but it just tracks a lot of very consistent growers. So it doesn't have to be consumer staples. It could be a payroll company or something like that, but just sort of more defensive, steady Eddie, recession resistant, so to speak. Again, sort of a new relative performance low, which is just kind of what you want to see. And then on the flip side, in fact, let's look at the IBD 50 index, which is, again, they screen for relative strength and earning strength and that sort of thing. So it's kind of the pond that I fish in. And I showed this chart in Growth Investor yesterday, Thursday. This is just a weekly chart. So this is the IBD 50. Nice uptrend here, although you can see the relative performance didn't quite keep up. But it had this big decline, and now it's just maybe trying to get going. This is not it's not part of our indicator set, so to speak. But I do keep an eye on it, and it's just kind of coming out of this bottoming zone. Same thing with like the mutual fund index. This is real money mutual funds. It's harder to see on this chart. Maybe if I blow it up, I think I've shown it to you. Okay, but again, it's just kind of been in this sort of just broad bottoming phase in here, and maybe, just maybe, we're just starting to kind of get out of that. It doesn't mean like we're just breaking out here and it's going to go straight up. Like I said, I think things in the short term are a little bit more coin flippish, so to speak. But it is a good sign, nevertheless, just see that sort of pattern play out, okay? Now, on the flip side, I mentioned RSP and MDY. Then we have so this is the 10-year note, kind of a sloppy chart. But so big decline. Again, overall, the trend is still down. And I like to just kind of do this in my head. If you just draw a line like this, and then that, and if you just pretend if you could take out all these messy bars and moving averages, which I'm not going to do right now, it looks like a normal pullback, in this case, a pullback within a downtrend, okay? That said, it is sort of it is testing the 50-day line here. There's nothing magic about that. But, let's just see how it goes. Same, you look at the 5-year note. This is Treasury yields, of course. Not quite as strong, so to speak, meaning there's been more of a bounce in rates in the long end than the short end. But again, kind of testing the 50-day line here, this orange line. So let's just see how it goes. I know the Fed is next week. Maybe this is a great, buy point, so to speak, on the bonds, and rates really come down after next week. I don't know. That it would be it's totally normal so far, but certainly worth watching in the intermediate term. So far, the market's digesting it pretty well. Okay. The other thing I would just mention is, again, you just have listen, 3 months ago, everything kind of sucked, right? Most stocks. Intermediate term downtrends, longer term downtrends, even the Magnificent Seven, not so good. Inflation, interest, mortgage rates were hitting 25-year highs or whatever it was. 3 months later, hey, things are great. We've made a lot of money. A lot of stocks are up big. Doesn't mean it can't go. And like I said, big picture, I think it can and probably will. Just near term, like I said, keep your feet on the ground. So here's like Advanced Micro Devices. This was in top 10 back here. It's had a huge run, of course. It looks great. I mean, on the weekly chart, AI and all this kind of coming out to just new all-time highs here. Could it just be getting going? I hope so. And I think some of these stocks would be a lot higher down the road. That said, we took some partial profits in here as of this morning, and then we'll give the rest room to consolidate and see how it goes. Okay. And there's just a lot of cases. Some of them are very extended. Some aren't. This is ServiceNow, reported great earnings. But it came out here at 600. Here it is almost at 800. Which for this stock is a pretty big move. I mean, that's 60 to 80 is a pretty big move for a big cap name. Looks great. Wingstop, this has earnings coming up, I'm sure. Well, I guess not for a while, February 21st. But again, you break out at 190, you're up here at 285, pulling back a little bit. Looks totally fine. But if you have some of these things, if it's small positions, whatever, it's how you want to handle it. But maybe ring the register, take some partial profits, hold on to most of the position. That's how I would handle it. But just be aware that, some of these stocks can easily pull back at least to the 50-day line, maybe below it, and just kind of build some sort of structure. I'm not predicting that. If I was, I would just sell. I would be 75% in cash selling all these winners left and right. That's not what I'm predicting, but I would just say, there is some risk management that goes on. So just keep your feet on the ground. I'm still bullish. We bought a half position of something this week, so I don't want to make it sound like I'm too negative. But this is usually the time in the cycle of the uptrend, the rally phase, that you start to hear from people saying, would I buy more of this? Should I, I bought at 60, now it fell to 50. Should I buy more, average down? You start to kind of lose your way a little bit. So just keep your feet on the ground and see how it goes. There's certainly a lot of stocks acting well, okay? In terms of buying, now that I've got off that soapbox, looking for more things that are just maybe fresher setups, maybe could benefit from a rotation if you see it into the quote broad market. This is KKR. They do have earnings here February 6th, it looks like. This is the bull market stock. Now Blackstone, let me go back here. Blackstone reported this week. Blackstone's been a little bit of a laggard in the group, even though it's kind of the granddaddy bull market stock. But it hit the 50-day line. It's bounced. It reacted, okay to earnings or whatever. KKR is a better setup. Very tight 6-week, I think 6 weeks. Yeah, 6-week structure in here. You can barely see it after a really nice run here. Of course, it's not like a tech, it's not an AI play or whatever. But you can just see kind of challenging its old highs here. So it took a break for a month and a half. Now it might be ready to get going. And of course, if it is a real bull market, it's nearly a sure thing that, the asset valuations and money inflows are going to pick up in a big way for all these bull market stocks, okay? A lot of semiconductors like AMD are extended. Taiwan Semi's interesting. The foundry area, like GFS, I'm kind of going all over the place. GFS is just kind of, the foundries have been kind of dead money, not dead money, but just up, down. They haven't been leaders, you know what I mean? And Taiwan Semi's, a humongous company, $20 billion in sales last quarter. And you can just see it's been nothing, but it built this kind of shallow base in here and really nice, powerful. You can see the volume here last week on the breakout, and it's following through this week somewhat. Ideally you get some pullbacks or whatever, but this certainly looks like more of an early stage opportunity. And if you're wrong, you put I'm not going to tell you where, but you put some reasonable loss limit in there. And if you get stopped out, you get stopped out. But I certainly think, risk reward wise, there's certainly an opportunity for higher prices. Pinterest, a little bit of a tail today. I don't know what that's about. But just in general, you had this big volume clue here up, whatever it was, 8 or 9 weeks in a row to multi-year highs. By the way, some people ask about this. The general rule is, just very general rule, if overhead is 2 years old, it's kind of old. It doesn't mean it has no impact, but it's just less impact, okay? So once you're getting back into like 2021, that type of time frame right now, I'm less concerned with it. I'm more concerned with the recent action, which has been very tight overall. You can barely see it probably on this weekly chart. On here, it looks like it's hacking around, but it's basically just been between 35.5 and 38.5, so 3-point range after this move. Looks pretty good to me. Earnings supposedly February 8th. Not supposedly, I'm sure they have their data right. But whether it's a breakout or a test of the 50-day line, it's a pretty nice setup in there. Expedia, I feel like I mention this all the time, so we'll see what happens. But again, you have this kind of, you do have some old overhead here into mid-2022, so that's, we'll see. But again, you just had this huge run, the huge volume clues, and then you're just, week after week of just tight action. Now, you could say it's been lagging, but it's kind of performing like, not that this is a mid-cap, small-cap, but sort of it's kind of performing like the broad market, the unweighted S&P 500, right? Now it's picking up a little bit this week. You can see volume picking up just a little bit this week. So we'll see how it goes. Again, you got earnings soon, February 8th. So how you want to handle it is up to you, but pretty nice little pattern in there. GitLab is more in the tech sector, and I've mentioned this before, GTLB. It had the almost 10 times average volume on the breakout. There is some old overhead, back in here. Again, it's kind of fall of 2022, so it's a little borderline. So it shook out a little bit. What I like about this, though, is you can see down here, it's not overwhelming volume, but just on the latest push to new highs, this was 4 days in a row of above average volume. In fact, let's see how above average. So yeah, 20 to 30% above average, call it. So not the be all end all, but when you get 4 straight days and that's kind of like, in this case, I would kind of call it like a mini volume cluster, day after day after day after day of buying, above average buying in the stock. It's not like there was one day where it took off. And of course, the stock ramped to new highs. There was a shakeout this week on supposedly some of their servers are still hackable or something like that, but it didn't sound like actually a hack happened, whatever. You can just see the stock snap back. So that looks pretty good. GitLab's a unique story. Academy Sports, this was in top 10 this week. This is one of these sort of potential pullback buys. Again, a lot of these stocks, I mean, the big thing last year was, and obviously 2022, but things didn't persist. So, I mean, like, I don't want to say 90% of the time, but 70% of the time, you get this nice IPO base, you get a breakout, you get a market that's still pretty much in gear, the big cap indexes anyway last year. And it did have a run, don't get me wrong, it's not like it didn't do anything, but ASO then just gave it all back. That you just saw that a lot last year, just sort of unusual action. Now, though, it's put on this run, it's kind of built this whole new sort of almost like a huge IPO base on a base. And now you have this sort of 4-week rest period in here. They just reported earnings the end of like Thanksgiving. Okay, so they're a little bit off fiscal year. But to me, it's a pretty good setup in here. I mean, maybe it rests a little bit more in for 4 or 5 weeks total. But overall, maybe if you do get some of that rotation of the broad market into some of the retail plays and medical plays, this is a name that could do good. On the mega cap side, for people who like financials, this is American Express today. I just noticed it. I never underestimate American Express is not my kind of company or stock, I should say, but I never underestimate big liquid, clearly sort of number one players that gap up on huge volume to new highs, which is what American Express is doing today. Okay. So I don't know if it's your cup of tea or not, but on the weekly chart, you can kind of see it's trying to come out of this huge, 200 was the high back in 2020 at the bull market high, basically early 2022 for American Express. Trying to break out today. Back on the smaller side, Fresh Pet. Again, you just have a lot of these stocks. There's no guarantee. I mean, maybe the market pulls back and everything pulls back. So I'm not saying like if something's resting here, it's in the free and clear. But I am seeing a lot of these stocks that have rested for 2, 3, 4, 5 weeks that have the numbers, they have the sales. Fresh Pet's a little, I wouldn't say it's the most liquid name of all time, but it is set up pretty well in here. And so you're just looking for some confirmation. Earnings aren't out till late February on that. A couple of random names here. I just want to pull this out because I saw, so oil is, this isn't oil, this is the USO oil fund, but oil has been kind of the dog's dinner, kind of the worst sector. It's funny, I kind of keep an eye on the worst sector, but the reason is I like to look for the best stocks in the worst sector, thinking if that changes, they could get moving. Oil hasn't been going down at all, and it's just kind of ramping up here. Do I think that's some major uptrend? No, but we'll see how it goes. What I am kind of interested in, like I said though, is here's Weatherford, WFRD. These are total contrary plays. But you can just see the stock has not gone down at all, even though OIH, this is oil services. This is a weekly chart down there. XOP is producers. They've been trending down. So here's Weatherford is one that, frankly is a stone, 3% from all-time highs. Okay, big earnings and sales and stuff like that. Tidewater is another one. TDW, same sort of pattern in here. Okay, 5% off its all-time high. So I just want to throw that out there because sometimes I like to kind of keep an eye on things that are, everyone knows oil's down, gas prices are down, oil stocks, nobody wants those. Everyone wants AI. Well, just keep an eye on these. Who knows if there's a rotation, like I said, okay? And last but not least, I do want to mention, I'll start with biotech, XBI. I still like the action of biotech in here. Again, we had this big persistent run. Some M&A activity. A lot of good news came out, or at least, good rumors, I guess. And the stock this is the fund, has pulled back some, and it could pull back more. But again, to this point, just to do what I did earlier, you do this and then you kind of pull back here. I mean, you just kind of take a step back. That looks like a very normal controlled pullback. Could have more to go. 50-day line could catch up, so on and so forth. So biotechs remain interesting to me, maybe on some sort of resumption. And a sort of a similar pattern to that is Intracellular, which I've mentioned before. It's kind of tried to break out back here, but it's kind of tried to break out recently, and it did a little bit, but you can see that relative to the market, it never really kicked into gear, and now it's pulled back here into the 50-day line. Again, I'm not a big, how you want to handle is up to you. Maybe you buy it and have a really tight stop, but what you'd really like to see is, okay, this thing's pulled back, it's shaken some people out, there's been no real selling volume in here, on a daily basis or weekly basis. Now let's see if the stock can just kind of quietly march higher. Earnings aren't out till late February. There is event risk with this and other biotech names, of course, but just as a sector as a whole, I am intrigued, okay? So long story short, I'm bullish. I put a little bit of money to work this week, although this whole month has been kind of neutral. So I'm not opposed to buying. I don't want to make it sound like all of a sudden we're cautious, but I just want to make sure, because I guess I'm sensitive to it because I get questions and stuff. And, we've come a long way here. Ideally, we look back 3 or 6 months from now and we'll have gone a long way from today to there. But, there are a lot of stocks. And if the NASDAQ pulls back 3 or 4%, some stocks can pull back 10 or 12. Okay, so just either be prepared to handle that or just have your sell plan updated, whether it's trailing a stop, partial profit, or, buy points. Hey, I'm only going to buy this if it pulls back to this level, that sort of thing, and have your earnings list updated too. Overall, it's looking more and more like a real bull market, but at the same time right now, things are a little fluffy, they're a little hot and heavy. So like I said, keep your feet on the ground. Okay, that's all the time I have for today. Thanks for listening, and I'll be back again next week, first video of February, for another Cabot Weekly Review.